Coming to Bajaj Housing Finance. So, we believe the housing finance space has a lot of growth, and that is one of the sectors that we are quite positive on over the next 4 to 5 years. Bajaj Housing Finance is not a pure all-out housing finance in the sense they're not doing only retail financing, but they're also doing a lot of financing, which is mortgage discounting and different businesses, which allows them to earn a slightly higher yield and a spread. So there's a little bit of risk always associated with that whenever a slowdown happens, because that means that you could have some defaults at that point of time. Versus residential housing, which usually has lower risk because that's the last thing you default on. Secondly, if you see also where we find Bajaj Housing Finance has a little more risk is their loan to value ratio is higher than the rest of the industry. So that also kind of is a little bit of a needle for us. We are not denying the fact that the Bajaj Group have been phenomenal at the lending business, probably better than anybody else in the NBFC space, and they could probably replicate that given their reach, given their strategy, given their competencies when it comes to evaluating a loan to be dispersed. But valuations are expensive. When I'm paying 6 times book value for a Bajaj Housing Finance, I'm not denying the fact he has a much better ROE than the rest of the industry. But let's put it at this. When you have other companies like LIC Housing Finance who are probably 2 times the size or a little more than 2 times the size when it comes to loan book and trading at 1 time book value, I much rather think I have more upside in a LIC Housing Finance in the current scenario, given the fact that they are also growing the loan book, of course, not at the same pace, but their ROEs will also eventually move up as they also diversify a little bit more into the mortgage business. And the company that we stand out on, we've been recommending, and I'd like to say we have a holding, we're recommending to our clients is a company called Samman Capital, which is also a housing finance company. They are restructuring their entire book. The legacy book is getting written down. They're doing new loan books. They're doing it through a co-lending business model, which allows them to earn higher spreads and better, good ROEs. So we feel that it's trading at 0.6 time book value, almost no downside. It's a profitable company, dividend paying. So we believe that is where we are more positive. We'd much rather own the LIC Housing Finance and Samman Capital rather than holding a Bajaj Housing Finance, as good as the company and as good as the management is.
Yeah, that's a fair point. All right.